Smart Finance has a vast number of online tools accessible for free use. So if you visit our website smartfinancing.com, you will find out a calculators link here. Here so many tools we have given for free use. Out of that, one tool which is very much effective for intraday trend forecast, that I'm going to describe now how you can utilize that tool. So this is known as the dynamic intraday Gann angle tool, which can give you the intraday trend for any instrument except options. You can utilize for equity, you can utilize for future, forex and commodity. So this tool is a free tool. You can utilize by punching the data here. So based on the concept, it is being uh, developed is WD Gann's concept and the volatility principle. So here the detail about that principle on calculations, the theories of that, you can download this ebook and look into this. And this tool is a highly effective tool for intraday trend forecast. And this particular tool, if you are using, then what are the informations it need for the trader? It's a free tool, as I told you. You need the daily volatility, days high, low and current price. And the most preferable time is once the market opens, give a 10 to 15 minute gap, then after you start using this tool. And it works well in all instruments and its accuracy also pretty good. And the user experience says that more than 70% accuracy it can give. However, the paid tool is having a much more accurate readings so than this free tool. So as I said to you, this requires high, low, current price and daily volatility. So if you do not know the daily volatility of that particular instrument, just click here. So you can calculate the daily volatility. So upon clicking this thing, you will get a page wherein we have given a calculator to calculate the daily volatility. This must be taken from the past 10 days reference. So here we have given the example, the recent day should be placed at the price number 10 and the oldest day must be placed on the price number 1. Suppose anything if I am putting here, so these are the prices, just I am feeding some price of Nifty. So this is not the actual price of the Nifty as it has closed. So I'm just feeding some prices here, and based on these prices, we need to see that what calculation it is giving. So, and I am going to punch all this data. So once you will give this trailing 10 days data of the last traded price, and you have to hit the calculate button. Once you hit it, you will get the daily volatility and annual volatility. So this daily volatility you require for your calculation, it is giving 1.939384. So if you give the actual data, then you will get the correct daily volatility with reference to its past 10 days historic values. So 1.9384 we are getting, so I am putting that 1.9384, and I'm just going for the Nifty. What is the value it is trading? So days high is 8378, low is 8310. So I'm just going to feed the same thing here, 8378, and I am going to 8310, and currently my Nifty is trading at 8366. So 8366 currently I am trading. So 8366. So once I give these inputs and I'll hit the calculate button, I'll get the calculations as for the WD Gann's angle principle, the Gann angle principle in its dynamic way. Dynamic way means we are utilizing volatility for that. So it is telling that buy price is 8357, sell price is 8330, and these are the targets for the day it is coming, and target 1, target 2, target 3. So current price reference if we can take, so you can say that we are at the target 2 and target 2. So this is how it can go for, and once you are a buyer of this particular instrument, So if you are buying at 8357, 8330 will be your stop loss. So if you wish to hedge it also, you can utilize this particular tool. This is a intraday analysis. So 8357, if you are buying it and 8330 is your stop loss, you can think of buying a put option of 8300 or so if you wish to hedge it. And similar way, once it is going for target 2, target 3, target 4, trail your stop loss to the previous target. Once you achieve the first target, trail your stop loss to the buying price. Second target, trail your stop loss to the first price, and so on. You can just go on trailing your stop loss so that you can get some more profit in this particular trade. Once the trailing triggers, you have to come out. So this is based on this particular concept of WD Gann angle along with volatility. So this also we have made it as a GAV software, Gann angle and volatility software. So our paid software will give you completely different outcome, because here you are taking a daily volatility based on your past 10 days reference, but many other logical implications are not there. So here, if you wish to know what is this concept and wish to read that concept in detail, then you can just click there. So you'll come to know about that Gann angle and volatility principle, how the calculations happen, what are the formulas behind it. With examples, we have explained it here. And in fact, if you are using our paid tool, that is quite different. So suppose if in the paid tool, if you are utilizing, if you are just you have to click the button here and calculations will come automatically. So here the GFE analysis, the Gann angle and volatility analysis comes, and it gives you in the different cycle format, and currently price is at what cycle, and what is being suggested for that particular time, that is also is given. You are at a cycle 3 and it is suggesting to buy. So this is how this particular principle works, and its success rate is quite amazing. And if you look into that particular tool, as I said to you, daily volatility is very important component of this particular method. If you get the daily volatility estimate correctly, the tool can give you excellent result. And besides that, you have current price, high and low. These are the things will be available on the screen. And if you wish to use this particular tool for next day estimate or the closing day of the current trading cycle, means if you wish to calculate for Monday and you are at Friday, so just change your logic little bit here. So use the current day's high, low and the last traded price, at what price the stock has closed. So that price you can utilize and use the daily volatility estimate and calculate, so that you can get the levels for the next day. However, you have to be little careful here. Next day levels, if there is a huge gap up or gap down happens beyond your target 1 or target 2, then do not trust that levels, do a fresh calculation. So this is how this particular concept works, and this is how this particular tool works. And similarly, we have many other tools. All these tools are very free tools, and you can utilize at any point of time. You can utilize on your mobile device also, and this is highly accurate tools.